Traders all around the world, this is FXPassion broadcasting you live on YouTube, and this is Forex Trading Course 101, and we are in the Forex Trading Week. Remember the three pillars. We are trying to build a strategy and or a system. We are trying to understand how risk management works, and we are trying to understand how psychology works in trading, in systems, and in our risk management. If this is your first time with us, we are in the intermediate module. We finished the Fibonacci's. So we are in the Forex Trading Week, where we are not going to learn anything new, but we are trying to implement what we have learned so far. And remember, the webinars are not investment or trading advice, especially in the Forex Trading Week. Also remember that 90% of traders lose money in the Forex market worldwide. For homeworks and or questions, you have my Gmail contact, my Skype contact, and my LinkedIn contact, everybody. And also remember, I have a 20 seconds delay on the chat. That being said, let's dive into the live markets. So on Friday we finished the AUD pairs. So if you have a question or idea about a currency pair, please type in the chat what currency pair do you want that we analyze. If not, we are going to go by default. So we are going to check Canada CHF. Hello Miguel, how are you? We are going to check during this week, we are going to check every currency pair, everybody. But if you want a particular currency pair, please type in the chat. And we are trying to implement what we have learned so far. Now Canada CHF monthly chart. This is the monthly chart. And here, everybody, Fibonacci's don't work. Okay, don't draw Fibonacci's. At least don't draw Fibonacci's on the monthly, weekly, and daily. We said we learned so far that we learned so far that Fibonacci's don't work in a sideways movement, right? In a sideways channel. Okay? So I'm going to delete this, I'm going to delete this, I'm going to delete and delete the indicators. We are here right now, right? So we are in the middle of the range, and looks like the market is at resistance, right? This is resistance, so our bias for this week is going to be short. And remember, many times we are using the stop reverse orders, right? Because if we are going to delete a few of these, delete. So from the last one, and this is the specific of the sideways channel, the market went here and touched the upper band, and here and touch this band, and we are here right now. So the long-term direction is up, the short-term direction is down. And if we check the candlestick formations, the pressure, right, the pressure is bearish, so we are going to try to short the market, and we are going to put a stop loss order, and it's going to be a stop reverse order above the high up here. We need to check if we have enough capital. So this is the monthly chart. Let's go on the weekly. And don't do this, everybody. This was a lesson of what not to do on the charts, because you can't see anything right now. This is the clean chart, right? Okay, so what we have from the weekly chart, we have a bearish candlestick formation. What else can we use? We have learned so far trend lines. So let's draw some trend lines. Okay, and color code in black. Something like this. And as you can see, everybody, the market is trying, right? Maybe this week is going to break this downtrend line. Either way, stop reverse order is going to be somewhere up in here. Okay, so we're trying to short term, and if for any reason the market is going to reverse and go up, then we are going to reverse our positions. So this is the weekly. Let's check the daily. Close, close. The indicators close, 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 reverse, close, close, delete, 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 delete. So we were in a sideways channel, sideways movement. The market broke out of this sideways channel, of this sideways movement. So we are here right now. We can use the uptrend line. And remember, don't draw Fibonacci's on the sideways movement, sideways channel. So this is the medium term, this is the short term, right? And as you can see, everybody, the market did the left tip, center tip. We have a lower low and a right tip. So most likely the market is going to fall. What we have learned so far, we have learned the market wave. So what's the trading plan for this week? The trading plan for this week is wait for the market to make a new extension, wait for the retracement, and enter short on the next retracement. You don't need Fibonacci's in here. And remember, depending on the capital you have, it doesn't matter if it's a demo account. You need to trade on the demo account as you would trade on the real account. So if you have enough capital, stop reverse goes up here. If not, stop reverse is going to go up in here. What are the numbers? So the stop reverse, the best stop reverse order is going to be at 0.76536. And the second stop reverse, not so good because we are inside the market wave, is going to be at 0.75779. Okay? And some of you are asking, Passion, can I enter shorting the market right now? Yes, you can. Why not? Why not? The market broke the aggressive trend line. We have bearish candlestick formations. But if you want to be more secure, less risk, I would wait for this one. Okay, everybody? It's up to you. You can enter right now if you want. You can wait also for the next counter trendline break. And remember, these webinars are not investing or trading advice. Okay? But the plan for the beginner traders would be wait for the new extension, wait for the retracement, and enter on the next. But yes, you can enter here because looks like that we are ending the retracement on the smaller scale, right? And the market is slowly falling. Any question about Canada CHF, everybody? No questions? Okay, great. So let's move on to the next. What's the plan for this week? Can CHF JPY? Let's wait for the software to respond. There you go. A few seconds. Okay, we are going to check the delete the indicators, check. Okay, so now we're going to delete the moving averages, but this is a nice chart right here. Maybe not the perfect one, but this is a nice chart. Okay, we have the Fibonacci's, we have the original one, we have the contrarian one, and delete this one. And we have pivot points, and we have support and resistance levels. So, and what else? From the monthly chart, we have, or we are in some kind of projected sideways movement, and we are going to short the market, right? Similarly to the, oh, not this one. So we want to short the market. If for any reasons the market is going to move up, well, this is going to be the next level of resistance. Okay, but the candlestick formation, it looks like, this is the monthly chart, we need to wait for a month. It looks like that the market is ready to fall. Okay, now Fibonacci's, well, we have a down original Fibonacci, and the market didn't find the confirmed C, so we don't have a confirmed C. What we are missing? We are missing the Fibonacci of the confirmation. So it's going to be here. This is the first one. This is going to be the second one, and this is going to be the third one. So reasons to go short: original Fibonacci is down, Fibonacci of the confirmation is down. Technical risk, we don't have a confirmed C, we have two layers of the sideways movement, right? So this is the plan. Now let's go on the weekly, and again, don't do this, everybody. Don't put everything and anything on the chart. Let's delete, 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 delete. If not, you are going to see anything. We have a down Fibonacci, original one. We have a contrarian Fibonacci, still working its way, and we have a Fibonacci of the confirmation. We're going to use this as a contrarian, and we are here right now. Down Fibonacci of the confirmation, and the sideways movement we are talking about. This is the first layer. Let's make it bigger, something like this and like this. This is the second layer, and clone. This is the bottom, right? Somewhere in here. And again, as you can see, we have bearish pressure, bearish candlestick formations, and so far the market is testing us, right? The market is going up. Anyway, this week we want to short the market, right? If and only if the market breaks the most recent high, then we are going to take a look to go long, but for the time being we are trying to go short. This is the weekly chart. Let's go on the daily chart. Remove the indicators. Remove. Okay, and remove again, remove the indicators. There you go. This is the daily chart. And let's remove a few things here. Remove this mess. We have a down Fibonacci original one. We have an up contrarian Fibonacci. We don't have a confirmed C, but we have a Fibonacci of the confirmation, and we can adjust. We can adjust this Fibonacci of the confirmation. So red goes to red. This is our second Fibonacci of the confirmation. There you go. And the market broke our Fibonacci of the confirmation because we are sideways. See everybody, this was the next Fibonacci, and the market stopped us out, which is a confirmation that the market is sideways. Okay, so we're going to delete the Fibonacci of the confirmation. It's not valid anymore, not valid anymore, not valid anymore. and this is the path we are trying to short, right? We have bearish pressure, the market broke the counter trend line, which is here, made a low and a lower high, so the market wave extension retracement is here, right? So we are going to go short when the market breaks this area here. Okay, so let's write this down. And remember, these webinars are not trading or investment advice. Let's put it 24 black and short the market at what? 109.206. Stop reverse at, what's the number? Stop reverse at, let me see, stop reverse at, I'm going to delete this one. Stop reverse at, what's the number? Somewhere at, stop reverse at 110.485. Let's see. Okay, we're going to what? Put an alarm. Put an alarm here, put an alarm up in here. So if the market is going to break the lower level or the upper level, then we are going to enter. Hopefully the market is going to break. Oh, one more. If the market is going to make another bearish candlestick formation, up in here we are going to enter short. So short the market with a bearish candlestick formation. Daily chart near the upper band. There you go, this is the plan. Or what we are going to do, well, we want to short the market, or the market is going to break this level of support and we are going to short the market here, or the market is going to move up and possibly make a bearish candlestick formation up in here, because the market is also locked inside this smaller sideways movement. So we are going to enter here short, right? The more the market goes up, the better our risk reward. Miguel is saying, I'm not familiar with the reverse stop order. Can you please give us a short explanation? A stop reverse order is, Miguel, that in the same time when your sell order is going to end and close with the loss, at the same level you are going to open a buy order. Okay, Miguel? The difference between a stop order, about the difference between a stop loss order and a stop reverse is that with the stop loss order you are going to just close your trade. But when you have a stop reverse, you are going to close your trade and open a new one at the same level going into the opposite direction. Okay, Annie? Okay, Miguel? Got it. Okay, great. CHF next, open Euro AUD. We were shorting in the previous week. The train has left the station already on the Euro AUD. It was a nice short trade, everybody, in the past week. So let's see first the monthly chart, right? monthly chart. This is the daily, the monthly. Let's delete the indicators. Delete. Okay. So this is the big picture. We have an up Fibonacci original one and we have an up Fibonacci of the confirmation, and the market didn't hit the Fibonacci, the extension on the monthly, but it looks like the market is locked inside this sideways movement, sideways channel. And again, we have bearish pressure here. You can see the candlesticks. You are welcome, and Miguel. You can see bearish candlesticks here. And let's move to the weekly. Where is the weekly? Okay, I'm going to open a new one, and weekly chart, open, J-Cloud. Just give it a second. Euro AUD, Euro AUD, Euro AUD, Euro AUD weekly chart. There you go. Weekly chart. What do we have here? Well, we have an original Fibonacci pointing up. We don't have a confirmed C. What else can we do? We can draw a Fibonacci of the confirmation, which is going to be here, the first one, and then the market broke, and this is the second one. And as you can see, we are still up, right? But maybe, just maybe, we are locked inside this sideways channel somewhere in here. Something like this. Okay. And we were shorting the market here. These were tweezer tops, triple tops, right? Bearish candlestick formation. But as I said, at least in my opinion, the train has left the station to short the market. Okay, because we are here right now. So to short the market right now, in right here, maybe the risk is not worth it. Why is that? Because the Fibonacci's are still up. Okay, so I wouldn't enter no short nor long. And delete the indicators. Okay. And let me see. Passion, but the market broke the uptrend line. Yes, sir. The market broke the uptrend line, and the question is, at this stage of your learning, I'm going to say to you, so what? So what if the market breaks the uptrend line, right? So what? Right? No, no, I'm not being rude, no. But if you are with us, the market broke the uptrend line now, your mentor is saying to you, so what? Are we in a downtrend? Do we have down Fibonacci's? Right? So what? No, I'm not going to give you the answer. You need to learn, right? And everybody, again, if you don't understand what we are doing, why we are doing, go back on the Dukas Kobe YouTube webinar page and start to watch the Forex Trading Course 101 starting from the beginning. Okay, this is Forex Trading Week. We are not going to learn anything new. Just to remember, not all highs and lows are relevant, and when the market breaks the trend line, this is not enough. Okay, so Euro AUD not tradable this week, at least in my opinion. Let's move on. Euro CAD. EuroCAD is a long term, it's a buy. Let's see the chart. Let's close the lines, close the line, close the line, close the line. Delete, 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 delete. There you go. We have an up Fibonacci, original one, EuroCAD monthly chart. This is the long-term uptrend line. We're going to color code this in like this, black, and like this, right? So we have the original Fibonacci is up, the Fibonacci of the confirmation is up. Let me see if we have a confirmed C. We have a confirmed C, this is nice. And the market is reversing right now, it's going up. So we want to buy the market. We want to go long on EuroCAD monthly chart. Those are the bands, those are the trend lines, those are the Fibonacci's. Let's go on the weekly chart. Delete the lines, delete the mess, delete, 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 delete. Don't do this, everybody. Delete, delete. Too much stuff. You cannot see anything, right? This pair was short most of the summer. Yes, sir. FXPassion, are we will learn any indicator beside of the Fibonacci? Yes, we will in the future lessons, Victor. Yes, we will in the future lessons. So this is the uptrend line. We are here. We don't have the Fibonacci of the confirmation. So this is our C. This is the long-term downtrend line. Let's check if we have a confirmed C. So this is going to be the first contrarian Fibonacci and the second contrarian Fibonacci, right? And the third is blue goes to blue, right? So blue goes to blue, didn't touch the blue, and we are here right now. This is the third, and no, we don't have a confirmed C, everybody, not yet. Okay, we don't have a confirmed C, and we are here right now. This is EuroCAD weekly chart. We want to go long, go long, go long. Do we have the Fibonacci of the confirmation? Yes, we have. This is the Fibonacci of the confirmation. Okay, not tradable on the weekly chart, so let's move on the daily. You are welcome, Victor. Daily chart. So this was from the lesson. Let's delete, 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 50, 50, 80. Remember the lesson on probabilities. Delete, 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 delete. Okay, delete. Remove, remove most of the stuff. Remove, delete, delete. And let's see. If you're going to trade an up Fibonacci of the confirmation, this is the AB, which is going to be the contrarian on the daily. The daily is down. The daily is down, so what is this? Now, man, I need to change. Okay, no problem. Original one, so what's going to be? Blue and white and pink or violet, violet, violet and blue, red, white, white and pink again. And this will be the contrarian. There you go. So white didn't touch the red. Okay. So we have a Fibonacci of the confirmation, and we have a Fibonacci of the confirmation on the Fibonacci of the confirmation. Right? Daily chart. Okay, everybody, this is a trading opportunity. I'm going to enter in here. Okay. Now, stop loss. If you can, remember these webinars are not trading or investment advice. Okay. Stop loss number 1, it depends on your capital, is going to be here. Stop loss number 1 is going to be here. Stop loss number 2 is going to be here. And the best one, stop reverse, is going to be here. So stop loss, stop reverse. Okay. And let's undock and exit full screen. There you go. Okay, so entry, sell the market. I want to buy the market, not sell, sorry, buy the market at market. Okay, we're going to buy the market. And stop loss, where is the chart? Stop loss is going to be at somewhere here, 1.44. So, and I don't want points, I want price. 1.44, 1.44. Well, 0, 0, 0, why not? 0, 0, 0. Take profit, no take profit, submit. There you go, we are in the trade. Okay, we entered right now. Remember, these webinars are not trading or investment advice. We entered right now, and this is our stop loss, stop reverse. And if I need to make minimum 2, right, this is going to be the 1, and this is going to be the 2, the second one. Okay, everybody, I think this is going to be a nice trade. And on the other platform, not on YouTube, but on the other platform, somebody is asking, Passion, why didn't you put a take profit order? Well, because I'm going to cancel and replace. If the market is going to go up and up and up and up, as soon as the market is going to move, make a higher high, then I'm going to cancel and replace my stop. And if the market is going to make another higher high, I'm going to cancel and replace my stop again. So I don't want to have fixed, not in this pair at least, I don't want to have fixed take profit levels. Okay? Of course, if I see in the extension of the Fibonacci that the market is going to reverse heavily, then I'm going to pocket my profits and re-enter on the next trade. Right? But this is the plan. And again, everybody, you can accept what we are teaching you, you can reject, no problem. Okay? You should try to find your own trading style. And maybe, just because maybe we are here in the sideways movement, if the market is going to make a bearish candlestick formation in here, then I'm going to exit again and re-enter on the next. But I cannot risk more than I'm making. Okay, so this is EuroCAD. Any questions, everybody, why we are going long instead of short? A lot of you are shorting EuroCAD, Some of you are making some pips, most of you are losing money on EuroCAD. Are we clear why we are going long? And the best stop loss level is down here. The best stop loss is here. This is the stop loss level. So I'm going to lose what? $14? I'm going to lose what? 190 pips. Okay. It's okay. Passion, a question. If you are losing a trade, do you ever exit before your stop is hit or always wait till you are stopped out? Miguel, if I entered a trade and I can confirm that my analysis was 100% correct, then I wait until the market stops me out. But if I enter a trade and in the meantime I find out other things that I didn't see, so my analysis was not 90%, 80%, but was 50 or something, then I exit the trade. But what you need to learn, Miguel and everybody else, I never ever close the trade without a reason. Okay? I never close the trade without a reason. And the money and the pips is not a reason. Before I close the trade, I need technical reasons. Okay? So the general question is, it depends. Sometimes yes, sometimes no. But always I don't close the trade without a reason. Wait, yes sir. Yes sir, Victor sir. Never for fear. No sir, never. Fear doesn't exist. We talked about this already, everybody. Miguel just has enough courage to express himself. You are not going to get anywhere if you think in right or wrong. And if you feel fear. It's a game of probabilities, everybody. No fear, it's a probability game. No fear, zero. And one of the techniques that you can eliminate fear is don't risk too much. If you are going to risk 0.5% or 1%, where is the fear? There is no fear. You have 99 more trades to earn back the loser trader. Okay? No, I don't have fear. But I cannot speak for everyone because I don't know everyone, but I believe that professional traders that are making money, they don't feel anything. They don't feel fear. They struggle with greed, you know, but most likely they don't feel. Stop loss is a stop loss, no problem. You said that in none of your lesson. What is that, Victor? What are you talking about? Victor, I need to move on, okay? Because if not, we are going to wait too much time. Okay, please feel free to chat, ask questions, but I'm going to move on the next. So this is EuroCAD. Next. Okay, move like this. EuroCAD. So Euro AUD not tradable, EuroCAD. Euro GBP, if it's sideways, not tradable. Let's wait. Let's wait for the software to respond. We're going to check the daily chart directly. If it's still sideways, no trade. Okay. Oh yes, we have a trading opportunity. Okay, so this market, everybody, we have Fibonacci's up and down, and we are also sideways, but this market was doing nothing for the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, almost a month. Almost a month. This market didn't do anything almost a month, and right now looks like that it's breaking. Okay, so what's the plan? If this, let's write this down, if the daily candlestick formation closes bearish, we are going to short the market, but we need to wait for the day. Only if the daily is going to close bearish, we are going to short the market. Stop loss and stop reverse, in reality stop reverse up in here, and you are going to see this maybe on the weekly chart. Where is the weekly chart? There you go. Weekly chart. This is the weekly chart. The market is sideways, everybody. We have two layers of support, right? So we are going to short from here to here. Not too much, but still maybe a nice trade. Okay, and also the risk reward maybe not the best one, because it's going to be 1-to-1 risk reward. Okay, 1-to-1 risk reward, and again stop reverse, because this market is sideways. The last time the market approached this level, it went up. So went up and down, so maybe we can project that the market is going to go up again. You said that none in your lesson about no close the trade if you follow the plan. Yes sir, it has gone down to the lowest value from last May. Yes sir. Yes Victor and yes Miguel. Yes Victor and yes Miguel. Okay, so if you have done a great analysis, 85, 80%, 90% correct, stay with the plan. If you find some mistakes, you can close the trade before, but no without reasons. Don't close because of fear, or oh, the market is going against me, right? And Okay, this is Euro GBP. This is the plan. If the market is going to close bearish on the daily, we are going to short in here. Stop reverse is going to be up in here, right? So short term, what we are expecting, short term maybe is going to fall, but long term is going to go up again. Okay, this is the projection, this is the plan. What's the time? Okay, 10 more minutes. Next, this was Euro GBP. Next, Euro JPY. Euro JPY, we are short term, long term. So monthly chart first. Let's delete the indicators. Okay, this is the Fibonacci. We have the original one from the position trade. This is the lower band down here, and we have the Fibonacci of the confirmation. Okay, we want to enter long. We want to go long on Euro JPY. Let's delete. Let's check the C. If the C is confirmed, even better. So this was 1, Fibonacci retracement, 2. Yes, we have a confirmed C on the monthly chart, and the market is bullish right now. Where is the technical risk? Well, the market didn't break the down trend line, and the market didn't do another higher high, not a higher low. But still, everybody, we are trying to enter long. Okay, let's check the other time frames. Weekly chart, delete the indicators. It's a mess again. Passion, you need to clean the chart. Yeah, I know, I need to clean the charts, but you know how is the weekend, right? I don't want to stare at charts during the weekend, so what do we have here? Weekly chart, we have a down Fibonacci original one, we have a down confirmed C, and we have a down Fibonacci of the confirmation. So what we are going to do, we are going to draw a contrarian Fibonacci, and we are going to trade this contrarian Fibonacci. There you go. Okay, so from the weekly perspective, wait for the retracement and go long on the next counter trendline break. And because this is the weekly chart, maybe it's not going to happen this week, but maybe the market is going to push lower until this level of support down here, and only then is going to decide to go up. And similarly to the weekly, we are going to have the daily chart, remove the indicators. We do have already the Fibonacci's. The up Fibonacci, green goes to green. So this is the second one. And as you can see, everybody, the plan is already in place. So most likely the market is going to retrace until 61.8 retracement, right? And then break the counter trendline break. Break the counter trendline. Okay, so this is the plan. Now, risk reward is not the best. Risk reward it's not the best, because this is going to be the risk and clone. The reward is, oh no, okay, yes, still green goes to green. Okay, my mistake. Risk reward is okay. So we're going to risk 1 to earn what? 1.5, 1.30, something like this. Okay, don't enter, everybody, just because of the bullish candlestick formation. Wait for the counter trend line to break. And from the 4-hour chart, let's delete the indicators. 4-hour chart, remove, doesn't work, remove this, remove that. Let me see if we have. We don't have. Okay, so what we can do here? We can draw an up trend line and start to draw Fibonacci retracement tool, high to low. This is the first swing, and let me see. The market broke? No, the market didn't break, but our high is this the high? No, it's not. So we have the new Fibonacci is up in here. This is the second swing, and we are here right now. And again, we can project that the market is going to fall until this level of support. So this is the plan. When the market is going to make the first upswing, okay, the first upswing, we are going to draw the Fibonacci of the confirmation of the upswing, and we are going to wait. Just wait, don't trade the first upswing, just wait. And if the market is going to break the counter trend line, then we are going to enter on the second upswing. Passion, why not the first upswing? The first upswings, when you are going to enter, when we are entering against the trend, the first upswings are not strong enough. Okay? If you would enter in the first upswing here, where is the first upswing? Here, you would lose money. And if you would enter in the first upswing here, you would lose money. So when we are entering against the trend, everybody, wait for the first upswing to close. If it's going to close, it's going to break the down trend line, the counter trend line, and we are going to enter on the next upswing up. Okay? Maybe not this week, maybe in 2 weeks, 3 weeks, but this is the plan. Okay, one more, let's see, 5 minutes. Euro JPY, Euro New Zealand, not tradable. Stay out of Euro New Zealand, everybody. Euro New Zealand, not tradable. Oh, I was wrong, it is tradable. Okay, my bad again. We are going to short the market because looks like the market and Euro New Zealand is locked in this sideways channel. So short, we have an up Fibonacci, a confirmed C, Fibonacci of the confirmation, but the market seems that is locked inside this sideways channel. This is the monthly chart. We are going to move on the weekly. Same picture. Market making higher highs, higher lows. Looks like is locked inside this sideways channel. Not this one, right? But where is the channel? There you go. This one. Maybe we are locked in here. So let's make it violet and like this and like this and clone. So from the monthly chart, this is the band. Okay, short the market. Again, stop reverse up in here. This is the weekly chart. Let's go on the daily. Maybe we can enter right now. Daily chart, up and down, risk reward, sub A, sub B, sub C, sub, remove. Okay, there you go. So this is the plan. And remember, we are not trading the subs, we are going to trade the sideways channel. Okay, and this is the plan. Enter short at CTB, counter trend and break. Exit at D and re-enter on the next Fibonacci sequence, or leave the trade opened without closing it. Okay, this is the plan. So when the market, and if the market is going to close bearish and is going to break this counter trend line, then we are going to go short. If you want, you can profit take at the extension down here, or you can leave it open and short until the lower band. Okay everybody, our time is up. See you back tomorrow for the Forex trading week. And tomorrow again, if you have some currency pairs that you want to check, if you have some trades that you don't understand, if you want to have an opinion of some trades of you, we are going to talk tomorrow. Until tomorrow, stay strong and trade with passion. This is FXPassion signing off.